Good morning or good afternoon, whenever you're watching this video or wherever. I want to do a quick video on how to find great and amazing growth stocks that you can invest in today or tomorrow or in the future. And you could use this method to find growth stocks that are safe. Keep in mind, no stock is 100% safe, but some are significantly safer than others. If you're excited about today's video, then drop a like and subscribe. It's free, it costs you nothing, and subscribing helps me out a lot with everything I'm doing. Leave a comment with what your favorite growth stock is, or different ways that you find helpful when you're looking for growth stocks. Subscribe if you're new for weekly videos on investing and about life. Let's try to hit 6,000 subscribers. With all that out of the way, let's get into today's video. So how can you find growth stocks at attractive prices? Companies with potential to grow quickly are like magnets to investors in the stock market. And while they can suffer in volatile conditions, they're still the source of some of the most inspiring investment success stories you'll ever hear. At their best, they have a transforming impact, not just on their shareholders, but also their staff, customers, and even entire industries. But while growth companies can be appealing, they can also come at hefty price tags. In a buoyant economic conditions and periods when investors feel confident, growth shares can become relatively very expensive, but it's not always a bad thing. Paying what looks like a high price for a share, which is typically measured by price to earnings, the PE ratio, may be satisfied if a company is growing quickly. When a firm constantly beats earnings forecasts, the market can find itself in a perpetual catch-up mode, and that makes valuing it quite tricky, as the share's price leaps along behind the rapid clip of earnings growth. And as an investor buy into the story, the momentum can be very powerful. So as you know, we have YouTubers and other people hyping up certain stocks, and then you have Reddit also hyping up stocks. For growth investors who are relaxed about high valuations, the momentum is exactly what they are after, but there can be problems. The catch is that if and when the momentum begins to weaken, the performance can plummet, and the stock will drop, and you lose a lot of money, and all because you weren't prepared. Given that many growth companies tend to be smaller in size, they can particularly be vulnerable and unpredictable. So when things go wrong, valuation can tumble heavily. Another risk with growth stocks is a change in economic outlook. A deteriorating backdrop can quickly scare investors out of speculative shares. Inflation can also be a drag. That's because the valuation of the growth stock are often based on future cash flows. If the value of the cash flow comes under the pressure from rising inflation, then multiples that investors are prepared to pay for them today will also come down. So as you know, you have the Fed printing more money, and the market's going up when the Fed's printing more money. Not all the time, but most of the times. And then the price of, everything goes up, or almost everything, as we see with gasoline right now. Price went up and it went back down. The price of goods, meats, things that you might use daily. The price of used cars went up recently. The price of things just going up constantly as we print more money because the value of the dollar goes down. So we have to find ways to protect what we're earning, our salary. And the way you do that is by investing your money. So that's why I invest. You don't have to, but I recommend it, because Right now, I believe you not taking a risk is more riskier than taking the risk. Now, let's say you wanted to find some growth stocks. You can use FinViz, and here we go again. We're back at the screener page. So all you want to do is click on screener. It'll take you to this page. Click on all right here. It'll pop up all the different filters. You want to go on 20-day simple moving average, and you want to make sure the price is below SMA 20. Price below SMA 20 is the top option. Then the 50-day simple moving average is going to be price above the SMA 50. And when you go to industry, you want to make sure it's stocks. And then the 200 simple moving average is going to be price above SMA 200. Next, you want to go to average true range. And then you want to make sure that's over 0.5. All right, it's going to make the change. Average volume, you want to make sure it's over 200K. You can even go to 300 if you wanted to, but we're going to do 200 today. And then we're going to go to the EPS growth quarter over quarter. And we're going to make sure that's over 30%. And then we're going to go to sales to growth quarter over quarter. And we're also going to make sure this is over 30%. And then it's going to make the change. And then you're going to get a page or two worth of companies. And these are all great growth stocks using this screener and filter. It will narrow down all these different stocks, 2 pages worth. Make sure you always do your research, and it shows you the volume for each stock recently. So, you can just highlight, like let's say you wanted to pick this stock. You can highlight it. Search Google for Williams Companies. Click on the company. And then, do your research, read up on articles, go to their main website, learn more about the company, what they're doing. This company pays a nice dividends, but their PE ratio is high. Look at their finances, make sure, their finances, they're beating earnings. They're getting cash on hand. They actually have a really good amount of cash on hand. This is a solid company, in my opinion. One of the companies I would add to my list is actually currently on my list to stocks to buy once it hits a nice price. Right now, with the PE ratio being 25-31, I don't think it's a good buy, but I'll wait for it to dip and then buy and probably hold for at least a year or two because it's paying 5.4% dividends and the finance looks good. But if something goes wrong and they don't have great earnings anymore, then I'll probably jump ship and walk away from the company. 5 steps to find growth stocks. Why growth stock investing can boost your success. Before we jump into the 5 steps, let's quickly review why growth stocks is important. According to growth investing theory, we can expect that a prolonged sales increase will cause a favorable stock trend. Here's a couple of stocks, the FANG stocks, which consist of Apple, Amazon, Meta, Google, and Netflix. And as you can see, the graph below, it shows the 5-year history for those stocks. So let's get right into that. The first one is only invest in what you know. Always do your research, find out what the company's about, what direction it's headed. The trend is your friend to the end. So if it's trending, depending on what sector it is, then that's another advantage you have. Right now I can see biotech sector as it said in this article, being pretty popular and big towards the future. Be very selective when you're trying to find a growth stock. Let me be frank, finding a growth company is incredibly tedious. Many people on the internet claim they found the next big growth company or business or stock. Here are some key points you should investigate about possible growth companies: the market cap to sales ratio, market cap to earning ratio, R&D spending compared to annual revenue, quality of employees, integrity of the CEO, management, pending patents and intellectual property rights. How does the company compare to its competition or competitors? Growth markets. There are two basic paths for a company to increase sales. Option 1 is gain market shares. Option 2 is work in a growth market. Option 2 is much simpler. The situation can be compared to surfing. It is much similar to surf a wave when it's a good one. Make sure the companies have a clear growth goal. Being in the growth market is very important, but having a specific growth goals is even better. For an enterprise to qualify as a growth company, management must have the full determination to invest into the long-term growth. Therefore, executives must invest significant time, talent, and resources into growing sales numbers. Growth is hard. Growth over multi-year period is even harder. To achieve it, management must make sure there are always new products in its research and development pipeline. As an example, Tesla has a clear growth goals. Elon Musk specifically set targets to have 50% average annual sales growth for the years ahead. Telling the world and all the employees about such a goal will create a mind state of expansion and possibilities. An important factor for every company's future is mentality. Employees with a startup mindset will have the ability and the willpower to constantly find new customers. On the other hand, there are organizations which, by their nature, are just not thinking about long-term growth. As a case in point, a national utility company might want to stay national. This market has a fixed ceiling. Consequently, peer research and product quality. When I'm looking for the most promising growth opportunities, I always look at for the market leaders. I never settle for the second best enterprise in the market segment. Here is a hypothetical situation. Say you wanted to buy a common stock in the semiconductor industry. You are considering both AMD and Intel, but you are unsure which one to pick. Now you should ask yourself the following questions. Which of these two companies has a better chip product? Which company invests more into research and development? Growth companies are leaders and have significant margins. Such companies are always novel innovations. They don't copy innovations, but they create innovations. Here is a positive example for creating innovation. Google claims to be the front runner in artificial intelligence. Upon a close look, it turns out they did indeed produce a groundbreaking research in AI. First, they created the most widely used deep learning framework called TensorFlow. Second, they won the 2014 ImageNet competition, at the time the most prestigious image classification challenges. Third, they create the BERT, a language processing model which became the de facto standard for NLP tasks. Talented and motivated employees. Finally, my last advice for you is to pay attention to talent density. Employees are the most important part of a company. You should search for an enterprise which can hire the very best engineers in its respective field. Figure out where the most talented people go. and can be challenging. I find it very helpful to talk to people who work in their respective industries. More often than you might think, they can quickly tell you which company is currently losing top talent and which company is attracting the best people. So here's some top growth stocks for March 2022. BXP is the top for EPS, CPA is the top for sales, EQT is the top for combined growth. And yeah, as you can see, the top growth stocks by EPS growth. Boston Properties, BXP. Boston Properties is a developer, owner, and manager of a Class A office properties in Boston, Los Angeles, New York, San Francisco, Seattle, and Washington, D.C. Digital Realty Trust, DLR, is a real estate investment trust, a REIT which owns and manages technology-related properties. The company focuses on data centers, co-locations, and interconnection-related properties. EQT Corp. EQT is an integrated energy company focused on natural gas production. The company explores and produces natural gas and natural gas liquids, NGLs. Here's top growth stocks by sales growth. You have CPA, Upstart, and EQT again. Top growth stocks by EPS and revenue. You have EQT, Upstart Holdings, and United States Steel Corporation, X. All these companies are solid companies, and you should do your research on them and see if they fit to be in your portfolio.